Welcome to a Purple Chips web update for August 15, 2012. I'm John Schwinghammer, the author of Purple Chips, published by John Wiley & Sons and available everywhere. Next thing, I'll go to our disclaimer here very quickly. The information contained in this presentation is not intended to be a solicitation to buy or sell securities and is not investment advice. What you see is based on the criteria of the Purple Chips model and has not yet been approved by the author's employer. The information contained herein is believed to be accurate but cannot be guaranteed. Investing can be risky and you should consult a professional before investing in the stock market. Now let's go to the subject of today's webinar. I want to talk about Staples, SPLS. This morning Staples released their earnings, which were lower than expected. Just a minute, I'll just go over to the chart here. Hold on a second. Okay, I'll make the window a little bit bigger so you get a good view. So how does Staples look today? Actually, on the close yesterday, this is the monthly chart here. On the close yesterday, we were around $13.45. Now, with the announcement this morning, following their earnings announcement, in the pre-market, it is supposed to be down about 13%, so it's going to be about 11.25. We recommended Staples at $13 back on June 19th, 2012. And the question today is whether Staples still fits the model. As you can see, the earnings have been progressing higher. They flattened out in the last couple of years, but how will it be if Staples trades at 11.25? Well, what will happen is that this earnings line, if we match it to the last price, and if we do indeed trade at 11.25, this is what it's going to look like. Now, the important thing to note here is that this is the lowest valuation that we've seen in the last 20 years. So back in 2009, the earnings curve would have looked like that. And also back in, I guess that was late 2010, early 2011, the earnings curve would have been about there. So this is the lowest in 20 years, the lowest valuation. So this is the important thing here. We have not had 3 consecutive declines in earnings, which is one of the rules that I look for. So this is still a hold. 11.25, we still think that Staples is a buy. And what I'm expecting is that eventually, assuming that the earnings do hold up, that you'll see Staples move up at least to the $18, $19 area, which would be a very reasonable valuation and nothing extraordinary. When we came down here, this was considered a valuation reset because it was the lowest valuation we'd seen in the last 20, well, since its history. And so I don't expect Staples to get up to the high valuation of like $25, but I do think it's reasonable to say something like $19, $20 as a target within 18 months. So that's all for today. I'm John Schwinghammer, the author of Purple Chips, and thank you for watching.